Welcome everyone to Vested Interest. This is Shane, and in this video, we are going to cover our weekly portfolio updates. We did add $1,886 to the portfolio, so we will cover what we picked up with that new capital, any options we were in, any dividends received, all of the activity in the portfolio. We do this weekly update every Sunday morning. I do believe it's important to see a real portfolio out there for people who are just starting to build out their portfolios, maybe have been doing it for a while and are starting to get discouraged. So you can see the ups and downs associated with the market and the ups and downs associated with individual positions inside an overall portfolio. It's okay to see red at times in your portfolio. Positions are going to go up and down throughout the year. Every company has a 52-week high and a 52-week low, and throughout the year they can bounce off that 52-week low or that 52-week high at multiple times. So you want to be buying at the right time, right? But for those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do it, anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the portfolio every week. That's what this is, the weekly portfolio update. I put money into the portfolio, new funds every week. I also do larger purchases whenever I get extra funds, if I have a bonus from work or I do a side job, something along those lines. It is free to see what I am doing in my portfolio. I don't think you should have to pay for anything. We all have enough to pay for. We all have enough bills coming in. But if you would like to help out the channel, if you could do me a favor and hit that thumbs up button down below if you are a dividend growth investor, if you find any value in the content, make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the vested interest community. Click that notification bell so you're notified whenever we put out any new content. Along with these weekly portfolio updates every Sunday, we do a stock pick of the day series Monday through Thursday whenever the market's open. Take a look at a company that's pulled back on the day, see if that company's stock is presenting any value based on some screener that we run through in the video. I also do a couple other series that are monthly where we cover the previous month's dividends and options paid out. And then as we go into a new month, I do a video on the positions I'm looking to focus on for that upcoming month. So again, make sure you're subscribed. A lot of you out there who are watching the channel are not subscribed. The vast majority of you out there, and doing all that really does help out a small YouTube channel like mine. And a very, very special thank you to all of the subscribers out there. Over 1,000 subscribers now. The channel continues to grow because of people like you, and I really, really do appreciate it. Thank you so much. Now back to the video and the options for the week. Much better options the last couple of weeks. Options premium is a little better on some of the positions we've been running here lately. On August 19th, which was Monday, we went in and put in, I think, about 6 or 7 different potential contracts. These are the 3 that hit. So you can see we received $285.71 total in options premium. And we received those from 3 different contracts that we wrote. All of them covered calls. So we had sold to open on the 19th, 6 contracts. That's what the -6 means. So that means I had 600 shares of MPW. And if you remember, I ran options on 500 shares last week. Now, both of these looked like they were in the money at the end of the week at $4.52, which is where MPW closed out the week. But it actually looks like whoever bought these contracts may have sold them before they actually expired, and they stayed in my portfolio. So I've got the options premium. I still have the positions, so I'm probably going to look to run options on them next week, maybe the full 11 contracts for the full 1,100 shares, or I'll just sell them outright on Monday and reallocate the capital. Right now, running the options is helping me recoup some of the losses, potential losses, if I was to lock in those losses right now from the options premium. But let's continue here and look at these 3 contracts. So again, 6 contracts here for MPW. That's Medical Properties Trust. That's a REIT out of the real estate sector, with an expiration date of August 23rd, which was Friday, a $4.50 strike price. Same thing that we ran last week, except we just ran it a week out, and a little over a week out last week instead of just a week out on Monday. I didn't show the one from last week because, again, they both closed out on Friday with the same strike price. I did receive 36 cents per share after their fees. I kept $212.81 in options premium for these 6 contracts. Again, expired. It looks like it expired worthless, even though it was a little over my strike price, which means that whoever was holding these contracts must have sold them or bought them back before they expired, and they took ownership of those shares. We'll see Monday if that stands, but right now, unless they just didn't do an update here Saturday, whenever I'm putting out this video, it looks like I'm still holding the 1,100 shares, 600 of them from this contract here. Now, the other one, on the same day, the 19th, we entered into a contract, one contract for Starbucks, ticker SBUX. Starbucks is out of the consumer discretionary sector. Same expiration date, August 23rd, which was Friday. $97 strike price. Again, a covered call, so that means I owned the 100 shares, received 36 cents per share there, which was $35.45 after their fees. And one contract on BABA, ticker BABA. This is a Chinese company out of the consumer discretionary sector as well. Same August 23rd end date, Friday. $89 strike price, 38 cents per share received after fees, $37.45 for a total of $285.71. All of these expired worthless. Starbucks was under the 97, so we kept those shares, kept the premium. Same thing with BABA, under 89, so we kept those 100 shares plus the premium. So I will probably continue to run options on Starbucks, BABA, and depending on what I decide, either I'm going to continue to run options on 600 shares and sell the other 500 to reallocate funds, run it on the full 1,100 shares. It really depends on what the options premium looks like on Monday. We'll see what we can get into for contracts, what people are willing to jump into, where it's at, and then we'll make a decision there. I may, like I said, sell half this position, reallocate funds. If I can continue to get 200 plus a week in options premium, I might do that until I've recouped all of the potential losses. Now, I haven't lost anything with this position yet because I have not sold it at a loss. As soon as I sell it, I'll lock in those losses. But if I continue to run options on it, I could recoup all of that loss, lock in the loss, and then use it as a tax loss harvesting. So really not have lost any money, but on paper it will look like a loss. I'll have received the options premium back, which makes up for quote unquote the loss, but still be able to use it as a tax loss harvest because there would be unrealized loss at that point, if that makes sense. Hopefully that makes sense to you. Now, we did not receive any dividends for the week, one of the few weeks in the portfolio, nothing paid out. So hopefully we get some next week. I think as we enter next month, we'll see a lot more activity from the dividends front. But for right now, pretty slow going there. Now, August 19th, also on Monday, we did add $849.59 in new capital. Now, I know we're going to see this Cisco purchase here, which looks like a heck of a lot more than $849, but you've got to remember, Cisco last week was called away. Remember, we ran a contract on Cisco Systems. It was called away from that options play, so I wanted to pick up these shares at the beginning of the week. I tried to run an additional option on this. It didn't hit, but we did pick up the 100 shares. They are back into the portfolio, so I wanted to show that. So ticker CSCO out of the information technology, we did buy back that 100 shares. Now, if you remember, last week we received $4,800, and this one really ran up last week and continued to go up this week. So that's part of the reason probably it didn't hit whenever I ran the options. I was running this way out of the money, like $53, $54 whenever I tried it. But if you remember, we received about $4,800 in options, so I did have to add $139 and some change to this one to make it. So part of this $849, if you were to add this up, I know it doesn't add up to $849. The difference is this $139 I had to add to the $4,800 in cash we received from Cisco last week whenever this position was called away. But I just wanted to show that we did pick up the Cisco Systems 100 shares that we lost last week running that options play. Now, for new capital and new shares added to existing positions, we did pick up one share of Vale, ticker VALE. This is out of the material sector. This is a mining company out of Brazil. There are some tax implications for these foreign companies. You need to understand what your brokerage account does. My brokerage account takes out the taxes associated with each position whenever they pay out dividends at the time they pay out dividends. So I don't have to account for those taxes at the end of the year. They're already taken out. Your brokerage account may be different, and you want to understand that if your brokerage account is not taking out the taxes, you will be responsible for those taxes on foreign companies. The United States tax code requires you to pay for those taxes if your brokerage account isn't taking those out. So make sure you understand. You might want to talk to a tax advisor if you own any shares of foreign company stock. Nutrien is another foreign company stock, but same thing. My brokerage takes out the taxes whenever they pay out dividends. I know we're not talking about dividends. I'm just saying that's whenever taxes should be taken out. You should allocate a portion of those dividends received if your brokerage does not take out the taxes for you. We bought 8 more shares of Nutrien, ticker NTR, again out of the materials sector here. We picked up those 8 shares at $47.51. We picked up those shares of Vale at $10.46. And we continue to add to our Comcast Corporation position, ticker CMCSA. Out of the communications sector, we picked up those 8 shares at $39.93. Total passive income added with the new capital as well as the new positions added $28.28. This does not account for the Cisco Systems because that's already accounted for in the portfolio. Again, we were just adding back the 100 shares that were called away on Friday here. Now, we weren't done. We went back into the portfolio on August 21st, so a little later in the week, not Friday. Was a pretty busy week for me, so I wanted to do my buying a little early. Plus, I figured that the market would continue to run up through the week, so I wanted to try to get these a little bit cheaper, and it did. Friday was a heck of a week. A lot of companies ran up again. A lot of green in the market this week. Good to see, but it's a double-edged sword because then it makes all these positions a little more expensive. Continuing to build out that Vale position while it's down considerably under my cost basis. I think this is a great company long term, so we're going to continue to add here 7 more shares of Vale, ticker VAL, here out of the material sector, that mining company out of Brazil, $10.64. You can see it jumped up there whenever we bought these when it was $10.40 and some change earlier in the week, but later in the week was up by about 20 cents there. But we're going to continue to add. My cost basis is around $12.50, I think, somewhere in there. We'll see that here in the later. But so long as it's under my cost basis, under $11, I'm going to continue to add here. CVS Health Corporation, ticker CVS, out of the healthcare sector, we added 2 more shares there at $58.69. 1 more share. This is part of our weekly buys. This is our weekly ETF, one of the weekly ETF we buy. Ticker SCHD, Schwab Strategic Dividend Growth ETF. Excuse me. Picked up that 1 share at $82.50. Owens Corning. This one was one I would like to continue to add, but it is another one that's really run back up. It dropped down into the 150s. We added a little bit last week. We added a little bit more this week into the 160s. It is already back up into the 170s. And like I said, whenever I started to add to this, even though it is well above my cost basis, this one has pulled back by, well, it was pulled back by about 30%. But it's starting to rebound a little bit. And even though I'm up still 67, almost 70% on this one, I would like to add a little bit more before it really rebounds and gets back up to that 90, 100% return where I was at, a few weeks ago before it dropped. So I may be adding a little bit more here, depending on what, if it jumps up into the 180s, I'll probably back off. But if it's still down into the 160s, I probably will nibble a little bit. I wouldn't mind adding 3 or 4 more shares to this one. And Vanguard Total Stock Market ETF. This is every position in the total stock market. That's exactly what it says. Vanguard Total Stock Market, the total New York Stock Exchange. All the companies in there are in the Vanguard Total Stock Market ETF, ticker VTI. Added 1 more share there. And just like SCHD, we're going to be buying at least 1 share here every week, regardless of what the market is. So that 1 share cost us $276.01. $1,037.37 added in additional capital. These new shares add an additional $19.42 to the portfolio. Total invested for the week, $1,886.96. Total passive income added $47.70 in additional passive income. Run through the sector weights real quick here. Communications makes up 9.89% of the portfolio. Consumer discretionary at 8.31%. Consumer staples makes up 9.42% of the pie. Energy sitting at 6.02%. Financials 5.74%. Healthcare makes up 13.89%. Industrial sitting at 6.42% of the portfolio. Technology makes up 6.79%. Materials is 8.58%. Utility makes up 9.47%. REITs and real estate sitting in second still at 11.06%. If we sell out of the W position, it's really going to drop this and adjust a lot of these other weights here. I think it jumps up healthcare quite a bit to about 14 or almost 15% of the portfolio, but MPW may be one. Continue to watch that one, and if we can't continue to run options on it and receive a couple $100 a week in options premium until we offset those losses, I may be just selling out of it and allocating elsewhere. What I'd really do is probably look at taking those funds and allocating it across, like CVS that's still down, NTR that's still down, Pfizer that's still down well below my cost basis. Valet would be another one. Comcast, I'd probably add a big chunk there. So those positions that are in the red in my portfolio, if I do sell out of MPW, I would probably allocate the funds from that sale across those positions that are under my cost basis. I probably would add a little bit more to Procter & Gamble and Union Pacific as well, just to try to get those closer to 100 shares. I'd like to get Union Pacific, Procter & Gamble, and Owens Corning up to 100 shares, even though they're up significantly in my portfolio. I think they will continue to, grow by the nice 6, 7, 8% every year. So they're going to remain over my cost basis. I'm just going to have to build them out slowly over time and dollar cost average into them, which is my strategy anyway. So 4.41% is ETFs, right? Still remains the smallest portion, although at some point ETFs will be the largest position in the portfolio, just because the nature of adding to them consistently every week, regardless of what the market is. Over here on the right, you can see portfolio sector weights. The pie here matches up with the percentages, and then I have the dollar amount allocated to each sector as well. Now this is it, and I show this every week. Full transparency here on this channel. I want you to see a real portfolio built out over time. Again, just like I said in the beginning, I think it is important for newer investors who may have just started. I know whenever I first started, it was very disheartening to see I buy a position and then it drops by 8%. And I was freaking out. Oh my God, I've lost 8% of my money. Well, you don't lose anything until you sell, right? So when you see these positions in the red, those are really buying opportunities, except for MPW right now because they recently slashed their dividend again. Not one I'm looking to add to, really one I'm looking to potentially, sell out of the portfolio and reallocate funds, only because I didn't like this second. That's why it's highlighted in red. I didn't like the second dividend cut. They cut their dividend earlier, I believe last year. I was all right with that. I kind of anticipated it, but then they cut their dividend again recently, and it really rubbed me the wrong way. They kind of should have forecasted that a little bit and said that there may be future dividend cuts, but it is what it is. We all make mistakes. The greatest investors out there in the world make mistakes. Again, that's part of the reason I want to show this portfolio. I want you to see that you are probably going to make mistakes as well. Warren Buffett, for example, recently sold out of Paramount Pictures, PARA, a company he bought not too long ago, within the last couple of years, and then he sold completely out of the position at a huge loss. And he admitted, he made a mistake. So if Warren Buffett, one of the greatest investors of all times over the last 50, 60 years, still makes mistakes, you are going to make mistakes too. I'm going to make mistakes. Hopefully you can learn from the mistakes I make and not make the same ones. And that's the idea behind showing this transparently every week. So as you can see here, here's the tickers, all the positions in the portfolio. The previous slide, you saw all the sector weights breakdown. Here's the positions in those sectors that make up those sectors. Total shares of each that I currently hold as of the close of business on Friday. Current price as of the close of business on Friday, cost per share, the current market cost per share. Market value as of the close of business on Friday. My average cost per share. So this is what I'm paying per share. So let's talk about that for a minute. Owens and Corning, for example, I mentioned that one. Well above my cost basis, right? I'm back up 80%. I remember, I think it was last week or the week before, it was down to, I'm up 60%. And I'm like, well, I want to add to this position while it's down. And some people might have been thinking, well, you're up 60%. How is it down? Well, because at one point I was up 97, almost 100% on this one, and it pulled all the way back to 60%. So that is down from the high, right? Even though I'm still up 60% or 80% right now, I wouldn't mind adding to it a little bit. Also, my cost basis, $95.29, is well below where I have this 15% of 52-week high benchmark. So I don't want this 95.29 to be over 126.44, but I could probably still add 4 more shares, 5 more shares, and keep this right around $100 to $110 per share, which would still be under that 126, and then maybe wait for another 20 to 30% drop to continue to add. So I might get this to 54 shares next week, kind of back off. But again, it really depends on where it's at. I mean, like I said, I started buying this 2 weeks ago at 150, nibbling on this one again. Bought some more this week in the 160s. Now it's back up to the 170s. If it continues to run up, it runs up to the 180s, I probably won't add to it next week. But if it were to pull back into the 160 range again, I'd like to add 3 or 4 more shares. So let's continue on here. Purchase price, my cost into each position here, my funds out of pocket, as well as the dividends reinvested. So purchase price includes the dividends reinvested. Total return, whether I'm up or down, you can see it here. Obviously, the red means I'm down. Biggest loss is actually MPW, right, down 3,600. But that's why I was saying I wouldn't mind continuing to run the options wheel on this one and trying to recoup those $3,600. And then if I was still down, I don't have to recoup all the $3,600. Maybe last week I got 200 and some odd dollars. This week I got 200 and some odd dollars. So I'm already recouped $400 out of the 3,600 loss. So really I've only lost 3,200. If you add in the dividends paid out since I've owned it, I'm probably only down a couple thousand. So I wouldn't mind, again, continuing to run options on this one, trying to recoup some of this 3,600. And then after I did that, let's say another month or two, if this was still down, I could still sell it at a loss, right? And write that off as a tax loss harvest, even though I've recouped a lot of those quote unquote losses. So percent return here, you can see it again. Red means I'm down. I'm looking at the red as a buying opportunity, except for MPW. Sector that they fall in, what you saw in the previous was each sector weight. Here's the sectors and the positions associated, whether they're a quarterly, monthly, semi-annual payer. Current dividend yield as of the close of business on Friday. My yield on cost here. Portfolio weighting. So again, what you saw on the previous slide was each sector weighting. This is each individual's weighting in the portfolio. I do have a rule that I don't like any one position to be over 10% of the portfolio. I don't like any one sector to be over 20 to 25% of the portfolio. The only thing that's even close really is J&J at 6.68% of the portfolio, though it's not really that close. I'm not adding to this one right now, even though 164.13 is slightly under 15% of a 52-week low. So I could nibble on this one a little bit. There's just so many other buying opportunities. Starbucks is another one that's really run up, right? This one was down in the 70s where we were buying it. Now it's back up into the 90s. So that just goes to show you how big of swings some of these companies can have. So don't freak out whenever you see the red, right? Just because a company drops by 20%, 30%, I think Warren Buffett famously said, if you can't handle a stock dropping by 50%, right? MPW is at 40%. If you can't handle a stock dropping by 50%, you shouldn't be in individual stocks. You should just stick to ETFs or index funds. Portfolio weighting, like we were talking about, estimated annual income, payout months here, dividend growth year over year. So if I was to stop adding to the positions as these positions increase their dividends over time, it should be around 6.06% increases for the year, though it could fluctuate depending on how they increase their dividends. And where it sits at 15% of a 52-week low, we kind of talked about that with Owens Corning. Again, I can buy a position even though it is above my cost basis, like Owens Corning at 171, as long as it doesn't really drive 15% of my 52-week low cost, this $95.29 in this case, above this number here, 126.44. So total shares, 6,649.355 shares. Market value, $292,985.35. I have $265,361.01 into the portfolio. Keep in mind, this does include dividends reinvested. Total return, currently $27,624.34. That's nice to see. Up 10.41%. That's nice to see, but not what I'm focused on. Current dividend yield, 4.005%. My yield on cost, 4.422%. And this, the reason I have it circled in red, this is what I'm focused on. The dividends paid out by all the positions in the portfolio continues to go up week after week, month after month, quarter after quarter, up again this week, even though last week we did get a drop because MPW dropped their dividend. So last week was the first week in a while we've had a drop in the dividends. But back on the right track again, and if we sell this, we'd have another drop, and depending on how we reallocated the funds, we may lose a little bit, so we'll have to look at that whenever we do that. But for right now, back on the right track, Not quite to $1,000 a month, but we're heading there. I think we're going to get there over the next month or so, as long as no other companies in the portfolio drop their dividends here. Hopefully it's raises. Still waiting for Verizon to raise their dividend. AT&T, I'm not expecting it. Still waiting for Starbucks to raise their dividend, and still waiting to see if Kraft Heinz starts raising their dividend again, but I'm not really expecting it. Ally, I'd like to see them start raising their dividend again as well, but I'm not really expecting it. I haven't not seen anything saying they're going to. Whenever I bought this one, they were raising their dividend, and I am up significantly on this position, but my yield on cost is so high, I am not interested in selling it, even though there is no dividend growth right now. But back to this, $11,735.33 in dividends paid out over the next calendar year, and this is what I'm focused on. Looking forward to getting this to $12,000 or over $1,000 a month. Like I said, should be there over the next 30 to 45 days at the most, I think. And the dividend growth year over year currently sits at 6.06, and this does fluctuate as the companies in the portfolio fluctuate their dividend raises. So this one I adjust as they adjust their dividend payouts. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. What did you add to your portfolio this week? Do we have any positions in common? What are you buying? What are you potentially selling? Are you running any options? Would love to hear from you. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, go ahead and drop that in the comment section down below. I'll try to work it into the rotation. One more reason to make sure you click that notification bell down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Thanks for stopping by. Thanks for tuning in, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.